Well, hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. And what I had done last week is I asked our viewers to take a snapshot from last week's report so they could compare the forecast of the trend to this week's chart. And what I thought I'd do is something a little bit different, and I took the snapshots myself from last week's report, and I will overlay these here in a moment to show you and compare how well technical analysis works for a forecasting tool. Now, again, this is the line that I drew last week. You can see right here, this is the overlay right there. I put this on the chart. I'll just slide that over here so you can see that. This was the day that I put out the alert. This was last Friday, and I said we would go down to fill the gap right there. Well, lo and behold, the market moved exactly like I said it would, and on Thursday at 9:45 a.m. we filled that gap right there, and we have a slight bounce. Now again, this is the evidence. I try to do this each and every week so people can see it's not a magic trick, and that yes, technical analysis is a great forecasting tool, and week after week I've been hitting the numbers precisely, and hopefully you're finding some value in this. And maybe tune in to the Market Guys educational website that I'll give towards the end of this video. Okay, let's get rid of the diamonds. Now what I'm going to do is erase all lines except for this support level. I'm going to erase this former line that I drew last week and draw what I think what we'll see for next week. Remember, this is a bullish engulfing pattern, and today, Friday the 17th, we have very close to a hammer pattern. This long shadow under the candle on lower volume tells us that the sellers have slowed down their pace and the buyers came back with force today. So with that candle, I'm going to forecast that we're going to move back up. I don't think we're going to storm up. I think we're going to move back up to this level right here, right around 179, 179.5. And then I believe we're going to pull back. But I have to wait and see whether or not this resistance area will hold. I'm going to draw that as resistance. And if it does hold, then there's a good chance we could drop from those levels. But I don't want to get too far ahead. I want to show you again how precise these charts are. Again, the angle that I drew here is precisely the same angle that we had in this up move here and this up move here. And so I'm duplicating that each and every week because that is more or less the pace at which the market is moving. And that's how I get those angles. We call those speed lines. Now, if you look at the spiders, that's ticker symbol SPY, you'll see that once again, I've left my lines in place from last week. Lo and behold, there it is, following that angle precisely and to the letter. Came right back down, hit the mark, and I could show you the snapshot from last week right there. I'll move that over so you can see the comparison and what we talked about. And the gap was right here, and we came right back down from that gap. And again, this is something that you can do very easily if you just take some time to study technical analysis. Now that the market has moved according to my forecast, I can now erase those lines, and I'll show you how I draw the lines for next week's forecast. I'll zoom in here a little bit for you. Now this market is really trading in a trading channel, and there was a small gap right here that was filled yesterday. And when gaps fill, there's an 80% chance that the market will rally from that point. So I think that the spiders could actually move back up to fill this secondary gap above the market. So I'm going to draw that as a target, and it's also going to act as a resistance line. Also, when the volume drops on the way down, it tells us the sellers are losing their momentum. That's number one. Number two, these long shadows under the candle is very bullish. You can see back in the past, when we had those long shadows, we had rallies that followed these long shadows to higher levels. So these are very reliable signals and patterns that you can see on the charts, and again, very easy to learn. So our next market that we're going to look at is the Russell 2000, ticker symbol RUT. This is a more broad-based index. Again, I left my lines in place so that we would come right back down. Look at this, folks. Almost to the penny right there. It's unbelievable how close we came to that target. And this precise forecasting is all based on the technical candles. We're not using Fibonacci numbers and all these equations and formulas and indicators. I'm using straight candle charts, and I'm reading them just like that. So again, I could show you the market from last week by throwing up the snapshot there on the chart. Here we go. This is what the Russell 2000 looked like from my candle charts last week, and let me slide this over so you can see exactly how that played out. You see, on this day, which is Friday, I did the report. I forecasted lower, and boom, 1, 2, 3, it went right there. So the last thing we have to do after we've analyzed the trends here is erase the lines and then redraw. So I'm looking for an area of support. This former resistance, once broken, becomes a role reversal support. So that right there is my floor that I'm going to draw from. I think that we could go a little bit lower in the Russell 2000 first early on, and then I think we're going to go and bounce off of that, just like that. So I'll leave that in place. If you'd like to take your snapshot right now, go right ahead. 1, 2, 3, print it, copy it, save it, and then we can compare this chart to next week's chart. Finally, the VIX, ticker symbol VIX. This is the volatility index. Extremely important. This is what it looked like last week. I said that there was a resistance area right here that I believe would form a breakout. So I said we would break out over the high. That's why I drew that line that way. And here we go. Just like that, we did exactly that. We broke out over that resistance. And now the resistance is going to act as support. Now here's something you have to pay very close attention to with the VIX. First, remember that it's a contrarian indicator to the S&P. So I believe that the VIX is going to pull back to fill that gap, because gaps fill about 80% of the time, and then there's an 80% chance it'll reverse after the gap is filled. That's just the rules for gaps. So I think that's what we will see for the VIX. Now, if the VIX pulls back, the S&P could rally. We've already talked about that. And then after it rallies, again, according to the VIX, we could pull back as the S&P hits resistance. I don't want to confuse you here, but these are the things that I look at. You can learn this over time, get really familiar with it, and then just join us each and every week with these reports. Now finally, on Monday, we are having an open house Q&A. This is your opportunity to ask me questions, and I will analyze your stocks as a group. We go through a rapid fire stock analysis format. Just go to themarketguys.com and scroll down, and you'll see the link to the registration page right there. We start promptly at 8 p.m. on Monday, June 20th. Hope you can join us. I'm looking forward to that. Each and every month I do that. It's great. Lots of excitement, action-packed 1 hour all the way. It's free. Invite your friends, your family, and we'll talk to you then. Have a great weekend.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.